Hi, Greg Lewis, MetaStock Software. Your presentation will start in about 30 seconds. I just want to take a moment to tell you about an incredible market analysis tool and how you can get your own free 30-day trial. MetaStock is an award-winning software and data package that has helped traders just like you for over 30 years. It provides powerful, customizable tools for every trading style that will help you manage your positions from entry to exit. MetaStock can quickly identify, test, and even forecast potential winners. Want to find out more about MetaStock and how it can help you in your trading? Visit metastock.com/YouTube to get more information and find out how to get your own free 30-day trial. Thank you, and we hope you enjoy your presentation.
Let's go ahead and get started. My name is Hunter Smith with MetaStock. I'm excited to be hosting this webinar today and kind of a special presentation, a little bit of a longer webinar than we usually do. Before we get too far into it here, let's go ahead and go over our disclaimer. This demonstration is designed to instruct you on utilizing MetaStock and accompanying software plugins, and it's not a recommendation to buy or sell, but other guidelines to interpreting and using the specific indicators, features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies or information provided in connection with the company. Now, like I said, we're actually doing a special webinar today. This is a little bit longer than what we normally do. With Mr. Sagar Nandi, we're very excited to have him doing what we consider kind of a marathon educational session for us. A little bit about Sagar. We've actually been working with him for quite a while now. Recently just released his add-on Superior Profits Q Global, which is getting very, very good reviews from customers so far, and what we wanted to do is really have him go through his entire methodology and his system with some trading examples from today's market, etc. Sagar has an engineering graduate degree in telecommunications. He's actually been trading actively for more than 15 years, primarily in the USA and Indian stock markets. He trades stocks, futures, and options. After many years of research, trial and error, and learning from different experts all the way around the world, Sagar has created this system, this Q Global system. Now, initially, in 2013, when Sagar became a full-time trader, the system that he used, the Q Global system, was offered on an invitation-only basis to very active traders using a broker-specific platform for the USA market. Now, we were actually able to take Sagar's system, his entire system, put it within MetaStock and make it available for you guys. So what we're going to be doing is having Sagar really walk us through the system and cover what he has today. Like I said, this is a little bit of a longer session, so definitely have a drink of water or maybe some snacks close to you. We may or may not take a break or so within the presentation. Sagar, are you there?
Hi, Hunter. Yes, I'm here.
Wonderful. Let's do a quick sound check with you. Make sure we can hear you okay.
Yes, can everybody hear me?
Okay, perfect. Yeah, sounds like we can hear you just fine. I'll remain online. If anyone has any MetaStock-based questions, feel free to type your questions in the chat box. Without further ado, Sagar, what do you have for us today?
Sure, thanks. Thanks, Hunter, for the introduction. I'll start my session now. Let me do a check.
Sounds like your volume is just a little bit faint, so you might want to move closer to the microphone if you have it, or turn the volume up a bit.
Okay. Okay. Can everybody see my screen now?
Yes.
Okay. Lovely. Thanks, Hunter, again, and thanks everybody for joining for this class. Before we start, as usual, I'll go through our disclaimer from Superior Profit side. This demonstration is for educational purposes only. It is designed to share information on Superior Profit's trading system. The information presented here should only be used by people who are aware of the risk inherent in trading. Past performance is no guarantee of future return. Superior Profit is not an investment advisor. This is not a recommendation for buying or selling stock or any other instrument. Superior Profit will have no liability for any investment decision made by its audience. Okay, now that is gone, so let us start with the session. Those who have attended our previous classes know that we don't use any PowerPoint presentation or any pre-prepared material. We just go through the live charts in MetaStock and a lot of trades that had been taken previously by different people from our Superior Profit community. Today's class is slightly different because it is one of the marathon classes we are conducting. It may go into 4 hours. Last time we ran this similar session, it went for 4 hours. So we scheduled it for the same time. And we have a lot of material to cover. This class is also different today because we will be looking not only at MetaStock and the Superior Profit Q add-on on MetaStock, but we will also look at Thomson Reuters icon, that is MetaStock Zenith. And we'll be looking into different kinds of trades, long-term investment, swing trade, as well as day trades. Now this class is very useful. It takes example of live charts. However, this is not a substitute for going through the material that we have in our website. This is the website. You can see my screen, www.superiorprofit.co. In the main menu, there is an education option, and if you go there, you will find a number of easy to watch videos, then a number of books, blogs, live class like this one going on today, and community. So what I request all of you, if you have not done so, whenever you get a chance, go through the videos in the video library and read all the books. Then go through some of the blogs and look at the trades posted in the community.
Hey, Cigar, real quick, you might want to check which screen you're sharing. I see a few sticky notes right now.
Okay.
The screen that you're sharing.
Okay. Okay.
There we go. Perfect. Alrighty.
Okay, sorry about that. The sticky note is useful. We'll come to that. So what I was pointing to, okay, thanks Hunter for pointing that out. In our website under education menu, we have this video, book, blog, meetup, and community. Please go through that if you have not gone through that, and the suggested sequence of going through that is exactly as it is appearing on the menu. First watch the videos, then go through the books, then read some blogs, and a live class you can register for this session like you have. There will be more classes later, and go through some of the trades in the community. Now we had a look at the sticky notes, so why don't we start with that. I am currently in Bali, Indonesia. It is very early morning here, so I woke up a while ago and I was thinking of the last session we had with MetaStock, and since then several trades were posted in community. And community can be accessed by clicking this community here or going through the main menu. So community is an area where we post trade ideas. So we have a USA market and India market. So let us focus on the USA market for now. A number of trade ideas had been posted there using the Superior Profit system on MetaStock, that is Q charts. Now when I woke up today morning, I was getting ready for the class, I thought, why don't I go through some of the trades that were posted since the last class held along with MetaStock. I couldn't finish it, but these are the trades I could finish listing. Out of 1, 2, 3, 4, 5, 6, 7, 8 trade ideas that were posted in the community. We always follow up with the result. Out of that, one was not entered, though the idea was posted following the superior profit guideline, that is BRS. One went into loss, that is LVS, Las Vegas Sands, and 6 trades went into profit. Now some of these might be long-term investment, swing trade, and some may be day trades. We'll go through some of that. So this result is encouraging for anybody who trades in the market, and that is one reason I encourage you to go through the trade ideas posted here and see how they play out. And these trades are taken by, some of them are taken by me, some of them may be taken by some other traders, but it can be taken by anyone using the superior profit system, and that is what we are going to learn today in this marathon session. So there goes the sticky note. Now we go directly into the system. Okay, so this is our familiar powerful software MetaStock. This is a chart of SPY, S&P 500 ETF, plotted using daily chart and using a template we call hop-on template. So what is hop-on template? In superior profit, we have created a number of indicators, expert advisors, explorers, etc. They are all colorful, as you can see on this chart. They have no label, they have only color, and we have designed the system in a way that a trader like all of you and like myself can react to a market situation just by looking at the chart, by looking at the colors. The color codes are consistent. Green means it is either bullish or on the higher side, green or cyan color. Some of the candles you will see are colored in cyan. And red or magenta means it is bearish or on the lower side. And yellow color indicates it is neutral. By having this consistent color coding, we can look at any day and decide what to do. Now that is about the individual colors for the indicators, experts, etc. But these individual colors we have combined into logical groups, into templates. So we have multiple templates. The particular template I am using now is hop-on template. So this is used to enter a trade or hop onto a trade. So I am currently using the Q hop-on template. Similarly, we have a template for Q hop-off, that is for exiting a trade. Exiting a trade can be of different kinds. It can be at the profit target, it can be at the stop loss. And for stop loss, it could be at initial stop loss, break-even stop loss, or trailing stop loss. An exit could be at different target points with profit. So all of those indicators are grouped in this single logical template. So when we enter a trade, we primarily use only Q hop-on template. And when we exit a trade, swing trade or long-term investment, we look at hop-off template. Similarly, for a day trade, we use Q fine-tune, which is a fine-tune template. By grouping the indicators in a logical way, therefore, we look at only the necessary signals at a time. We don't look at all the things at the same time. That helps us make decisions fast. For example, when using Q hop-on template, our superior profit traders can usually make decisions within somewhere between 10 seconds to 30 seconds. If it takes longer than that, then we say that there may be some confusion in that chart. It is better not to enter the trade and move along to the next symbol on the same day or to another day altogether. So that is how we have created the indicators and grouped them into templates. So we have multiple templates, and we'll go through each template and each signal into each template. So that will take a while, and we'll take a lot of trade examples. Now you are free to ask me questions along the way or at the end of the webinar. It's a long session, so we have plenty of time. I will try to address all the questions that we can, and if we have some questions pending, feel free to email to Hunter or email to me. You can email me at info@superiorprofit.co, and we'll get back to you with the answer if we cannot cover it during the session. And let's make this session interactive. So we'll start with this chart now. This is again SPY, the S&P 500 ETF, using the hop-on template. We'll start from the top and traverse through the entire chart to the bottom to understand each and every indicator on the chart. Now at the top is a band using traffic light. So we use traffic light to see whether it is bullish, green is bullish, or it's bearish on a particular day, red is bearish, or yellow is neutral. So looking at SPY, we can see that from the left hand side of the screen, which is about September 2015 till today, which is July 2016, S&P has been bullish, bearish, bullish, neutral, bearish, bearish. It's a mixture of color. There is no particular trend in S&P. Now this kind of traffic light band is expected. A stock doesn't straight go up usually, and it doesn't go down straight also. So a mixture of color in traffic light band is expected, but it has been more so in S&P 500 for past 1 year, where it hardly moved. It moved not more than about 2%, I think, in the last 1 year or so. So when it is moving sideways, any symbol, an ETF, stock, future, like that, then we expect the traffic light band to be more mixed between green, red, and yellow. So at a high level, those are the periods we may not take trend following trades. Of course, the entire clarity may not come from this band alone. We can clearly look at the chart also. But generally, by looking at the band only, we can see whether it is just moving up, down, or not at a higher level. Now, how did I know that S&P 500 moved only 2% or so in last 1 year? That's where I use icon. So I will keep on switching between icon and MetaStock during this presentation. Let's go to icon, and now currently it is showing Jakarta Stock Exchange. As you know, in MetaStock, in icon, we can look at any index or any stock of any country. So let's go to S&P 500. Now, when going to S&P 500, we can go to the index, the ETF, or the futures. Icon allows to look at all of that. Now, just now I plotted S&P 500 index.spx, and we can see that yesterday, that's Friday, today for US time, for me it was yesterday, I'm in Bali, Indonesia, it went up by 1.78%. Whereas for YTD, year to date, the change is only almost zero, less than 1%, minus 0.46%. So it has not moved at all in the whole year. When the broad index, and SPY, S&P 500, is one of the broadest indexes of the whole world, definitely for the US market, when the broad index hasn't moved much during this period, we have to be careful about what kind of investment to make in the market. If the broad market is not moving, maybe many stocks are also not moving. It is moving sideways. Not all stocks, but maybe many stocks are not moving. So at those times, trying to take a breakout entry into a long-term investment may be frustrating. We may enter a trade at a breakout, and it may immediately come back hit the entry point and go further down, hit the stop loss, and make us exit the trade with a loss. So by knowing when the broad market is moving sideways and when it is trending, we can decide what kind of trade to make. Now looking at SPX at the detail level in icon, we can see that on Friday, that is today for US, 20th June, all the major sectors went up, and the best performing sector was energy, followed by financials, and the least best performer was telecom, and then utilities. Now those of you who study the sector also along with the broad market would immediately recognize that utilities and telecoms are the more defensive sectors. So yesterday or today you can say the market went up not because of the defensive sectors of utilities, telecom, but for technology, financial. So people, we may say, was more willing to take risk and go into non-conservative sectors like financial, technology. Now this is a single day snapshot and it is useful to look at it. However, we may not make long-term investment or swing trading decisions just based on one day's snapshot of the sector summary. How do I use this data then? This data is useful to look at a glance in the beginning of the day, for example, using real-time data, how the market is opening. And if we want to look into more detail, let's go into a particular index. So now I am looking into index movers and it is looking at Dow Jones Industrial Average. So if we open this in the beginning of the market, we will see how Dow Jones Industrial Average components are performing sector-wise. And this is of course as of end of market, and we can see capital goods did first within DJI and the worst performance was materials. Now how icon helps us is to have a look at the snapshot. There is probably not much value looking at it throughout the day and staring at it, but usually I tend to look at it once at market open, once in the middle of the day, and once on the end of the day. That is if I am in front of my computer, which I am not all the days, but some days if I am in front of computer, I take a glance at it. And if capital goods were doing well at the end of the day, probably it was doing well from the beginning of the day also. That is how the trend is. If a sector is strong in a day, it will usually be strong throughout the day. And we can also see, if I hover my mouse on capital goods, this part of the pie, we can see which ones were best performing among capital goods sector. So MMM, 3M, UTX, BA, Boeing, Caterpillar, and GE, all large companies. Now what icon allows me to do is click on that pie and go into drill down, you can say. Now under capital goods, we can see industrial conglomerates did best, then aerospace, then machinery. Now I can drill down further to go to industrial conglomerates and then drill down further to go to the actual company. So you can see that 3M, as far as DJI component is concerned, 3M did best. Now this may be useful information because if I knew that 3M is the outperformer of the day from the beginning of the day, there might be a chance to take a day trade opportunity in 3M. And we will look at the template for that at a later point of time. Now we came here to look at SPX. Similarly, we could look at any index. So let us use NASDAQ for now. Now in this case, instead of using the index, I am using the ETF, NASDAQ ETF QQQ.O. We saw that SPY hardly moved in the whole year. So let's see if the technology heavy NASDAQ moved more than SPY. On Friday, on 20th June, that is on Tuesday, QQQ did go up quite a bit, 2.15%. and it is taking a time on my computer because internet is a bit slow here in Bali. Okay, let it load, but we know that neither QQQ nor SPY moved enough in last 1 year. So we come back to the chart now, MetaStock chart for now. And this traffic light band then at a glance shows that it was not moving throughout the year. It was vacillating between bullish, bearish and neutral. Now that is a high level information that we got support from Thomson Reuters icon also, and of course from the candle chart below. Now let's look at the other signals or indicators on this Q hop-on template. We have a pair of bands at the upper side, a pair of lines at the upper side and a pair of lines at the lower side. We call them upper band and lower band. If you see that for most stocks, most liquid stocks, the stock or ETF or future will tend to stay inside the upper band and lower band. That's why we call them upper band and lower band. And by knowing that, we use that into our trading. For example, I will draw a vertical line. Okay, now if we look on the right of this vertical line, for some reason, if one had entered a long trade on this day, which is 13th April 2016, if somebody had entered long using SPY on that day, then we would like to book profit at the upper boundary if it was a swing trade. So this would be our target, and I am pointing at the boundary as of the entry day of 13th April. So if we had taken that trade, that 1, 2, 3, 4, after 4 days, the target will be hit. How superior profit traders trade is, before entry, they decide what is their initial profit target, and they use GTC orders to place limit order at the target price. So that is how we use upper boundary, to use it as an exit point. We also use in some cases to decide when not to enter the trade. Now if we notice where I drew the vertical line, this candle 13th April was actually a cyan color candle. Now this cyan color candle tends to show us the potential optimal entry point for a long swing trade. That is why I drew the vertical line here. Now let me draw the vertical line at another cyan candle here. This is also a cyan candle, which could be a potential long entry point, but this is another way we use the upper boundary in this case. Our initial target for any swing trade is at the upper boundary. So in this case, if we consider entering the trade, our exit point will be somewhere here, which is very, very close relative to the entry point. If we take the closing price as entry point, our potential profit target would be the small distance, which is very small relative to the last example. In the last example, our potential profit would be the distance between these two lower horizontal lines, which is reasonable, not large enough probably, but reasonable. But surely for this second example of cyan color candle, the potential profit was very small. So in this way, when the price is already close to or at or above the upper boundary and we have a cyan color candle, we stay away from taking the long trade. In other words, we say that if the potential reward, without knowing the right side of the chart as of that day, if the potential reward is very small relative to the risk, then we don't consider taking the trade. Now we'll go into potential risk later. It will be for swing trade at the recent low, so it will be somewhere around this level for the first entry, and for the second entry could be somewhere here. But for now we can see if the price is too close to upper boundary or at the upper boundary, we stay away from taking a long trade. Similarly, if we look at magenta color here, these magenta color candles, they are potential short entry point for swing trade, and I'll go into detail more later. But at this candle, let me draw a vertical line again. To the right of this vertical line, we have a magenta color candle, which could be a potential short. However, it is too close to lower boundary, so we wouldn't take any short trade at that point. That is how we use the upper boundary and we use the lower boundary as exit point for swing trades, and we also use it to avoid entering a swing trade if the price is already too close. So that is about the upper boundary and the lower boundary in this template. Let me clear this chart from these drawn lines. One easy way to do that is just apply the template again. Okay, we are now back with S&P 500 ETF. We are looking at it through Q hop on template, the template we use to enter a trade. Now let us look at the next series of signals. Let us look at these moving average kind of lines going through the chart. There are 4 of them. 2 are drawn as solid line to show that they are more important for swing trading and also for long-term investment, and 2 are drawn with dotted line. They are also important, but they are not part of our standard rule guideline. They are used, but they are not the necessary criteria for entering certain trades. So intentionally we made the ones that we use every time solid color. Now we have 4 lines, we call them direction lines. They show which direction the stock is going, and we have 4 lines to show at different frequency how the stock is moving or the ETF or future is moving. So the magenta color line is the fast direction line, then cyan, which is the standard direction line, then comes yellow, which is the slow direction line, and last is white, which is the very slow direction line. Now how I remember which color is which direction line is like this. In physics, every color has certain frequency, and the brightest colors have higher frequency or they move faster. So magenta should be the one which moves fastest or changes fastest. So this must be the fast one. Then the less bright is the cyan color, so this will be the standard. Even more less bright is the yellow, so this will be the slow, and white is the very slow. That is how I remember which direction line is what. Now you will also notice throughout superior profit system we have designed it in a way that is not only consistently color coded, but every indicator looks different. So just by looking at an indicator, we know what indicator it is. Similarly, just by looking at a template without seeing any label, we know what that template is. So this is hop on template, and you will see every other template looks different. Now coming back to the direction lines, normally for swing trade we use the fast and the standard direction line, that is magenta and cyan. Later on we don't need to even use the name of the indicators. Just by looking at the color and the movement of the lines, we have an instinctual decision making capacity on what to do. So if we are looking for a swing trade short, then we want both the direction lines to turn down. So let us look at this point, this bar, 31st December 2015. We see just prior to that, both of the lines started to go up slightly from say 18th December. The magenta line started to go up, cyan line started to go up slightly later because it is standard and magenta is fast. then it tilted down again, and on this day 31st December both the lines tilted down again, both the lines tilted down. So that is where we would like to enter a short trade for swing trade. Why so? Because overall we can see from this period, say 3rd November, in my chart that time format is DDMMYY. So this is 3rd November 2015. If I draw a line, we can see the peaks of the candle chart started to fall down. So we can say in a way that it is starting a downtrend. From this time, 3rd November. And when he came here, that is 31st December 2015, then it was down, up, down, up, down, up, and down again. This is our optimal entry for the short position. Why optimal? Because the stock is starting to fall down, but we wait for it to go up first, then tilt down. But not the first candle. The first candle didn't tilt down enough. By the second candle, it tilted down enough so that both the direction lines, the fast and standard, tilted down. So that is our optimal entry point for swing trade short, and that is where the color is made magenta. So what is this magenta color? In hop-on template, the candles are colored by what we call is flow color to help us go with flow, which is a trend following trade. And in this, green is traffic light, just like at the upper band, and red is also traffic light, just like at the upper band. And the magenta color is actually traffic color red plus something else. What are those something else? The something else are additional signals that we require to enter an optimal swing trade short. So some of those additional criteria will be that both fast and standard direction line going down. That's why it was colored magenta. That is the flow color. It's telling us very quickly that this can be an optimal short position for a swing trade on 31st December. There are also additional criteria that are included into the flow color. For example, if we look at the middle band, let's come to the middle band now. Middle band has a series of dots and bars. From the top, it is acceleration, speed, and momentum. And as the stock goes up, down, these colors changes. Together, these three indicators we group together and we say movement. So how we enter swing trade short is we wait for the day when the movement becomes bearish. In other words, movement becomes red. In our software, bearish signals are red. So we enter short swing trade when the movement becomes red. In other words, acceleration, speed, and momentum, all of them become red. Now red when? Red we can see, I will move the vertical line, there are multiple red bars, but we want to enter short on the first day, all of them turned red. So that would be this day actually, 31st December. Prior to that, acceleration and speed were green, momentum was red before also, but exactly on this day, 31st December, all of them turned red. So that criteria is also included into this flow color, into the flow color. So flow color is again a traffic light color as in the upper band plus additional criteria, and that additional criteria is several of the checklist criteria that we need to enter this go with flow or trend following short trade on SPY on 31st December. So if we enter this trade, where would be our profit target? As we discussed just now, our initial profit target will be at lower boundary, and we will not be knowing about the right side of the chart, but we will take a short trade at the end of the day if we are using real-time data. And I strongly suggest using real-time data because it improves the capacity to trade a lot. We can decide much better what to do, and we have a better reward risk trading profile overall. So if we have real-time data, we will be taking a short go with flow swing trade on this day, 31st December, just prior to market close. Not in the beginning of the day, not during the middle of the day, but just prior to market close, when we are confident that it is going to end the day with a flow candle color of magenta, which is a optimal swing trade short entry point. So this upper line will be our entry point, and without knowing the right side of the chart, our potential initial exit point will be the lower line. What will be our stop loss? Our stop loss will be somewhere above the recent swing high. So somewhere here, exactly where we can decide from hop off template. Remember, hop off is the template. We have all the exit criteria, all the exit indicators there. So stop loss indicator is in hop off template. We can switch to it later, but it will be somewhere above the swing high. Not very far, but somewhere just above the recent swing high. So now we can see, we draw the line now, but even without the drawing the line, we could see that potential profit in this go with flow short trade is more than the potential loss. So we say reward is better than risk, or we can say reward risk ratio is acceptable. It doesn't have to be always better. If it is nearly same or even slightly less, it is fine, because if we use the go with flow short or go with flow long criteria, we see that the wins are much more than loss in general once we get used to it. And we'll go to the sticky note that we accidentally looked at in the beginning. Out of 1, 2, 3, 4, 5, 6, 7, 8 trades, only one went into loss in this case, and these were all the trades going from top of the community. Nope, we can choose all the trades starting from the top of the community as of today. So with this kind of hit rate, this kind of success rate, it is okay to have reward risk ratio equal to 1, or even if it is 0.9, I am fine with that. Not 0.5, but 0.9 may be fine. But visually we can see, just by looking at the hop on template, if the potential reward looks acceptable relative to the potential risk, we can take the trade. So this 31st December on SPY, sorry, this is SPY. We are still looking at SPY. Yes, SPY. SPY gave a optimal short entry point go with flow, and the trade would have exited 1, 2, 3 or maximum 4 days later with profit. Now when it hits the initial target, lower boundary in this case is the initial target point, superior profit guideline is to exit partial position, say at least half position. If we have say two future lots on S&P 500, it could be traded using future also, then one lot could be exited at this point, and the rest of the lot, half lot, could be carried on using, for example, a break-even stop or trailing stop. Where do we get the break-even or trailing stop? We get it from hop off template. So why don't we look at hop off template on SPY as of this day and see where we will use the initial stop loss point and the trailing stop and break-even stop point. In this way, instead of looking at a template as such, we are looking at a trade and seeing how different templates and different colored indicators, MetaStock, icon together, we use into executing a trade confidently. So we came to this day. Now the question comes, how would we know that there was a go with flow short signal on this day? That is S&P 500 on 31st December. We know that by using Sonar, which is Explorer in MetaStock. We have a series of a large number of explorers to identify trades quickly. So the ones most used by our traders are this Q go with flow short, Q go with flow long, Q bounce short, Q bounce long, and Q headwind short and long. Go with flow is the trend following trade, headwind is the trend reversal trade, and bounce is an exhaustion trade where it falls suddenly or hit it hits a memory line, an automatically drawn trend line, and reverses. So bounce trade is a kind of reversal trade, sudden reversal, and headwind is another kind of reversal trade, and bounce is based on exhaustion. So it's a different kind of trade. When a stock suddenly falls, maybe because of earnings, and stabilizes and start to go up from a memory trend line, then we can take a bounce trade. Or we can take a headwind long or short trade when it is still moving in a particular trend, say headwind short, when the stock is still moving up but it is showing weakness, then we take a headwind reversal trade. And then is our go with flow trades, which is the trend following trade. Statistically, if we see our traders trades, we'll say about 70% of their trades are trend following trades, go with flow type, for swing trading, which also reinforces the idea that trend is our friend. With trend at our back, it is easier to enter the trade and take quick profit in swing trade and exit, and same is true for long-term investment also. Whereas for reversal trades like bounce trade and headwind trade, when it works, and it works quite often if we use the superior profit guideline, it gives huge profit. But still, I will say trend is our friend. So if we have to choose between a go with flow trade and a headwind trade, we may choose the go with flow trade on that day. Now we came here to see that how did we find SPY to be a potential go with flow short trade on 31st December. We might have done that by running this explorer, go with flow short explorer. Now MetaStock allows all of them to be clubbed together. So what I do, I first usually just select this 6 and I choose my symbol list from the bottom panel. So I have my own custom symbol list. So usually I have some very liquid large company stocks, only 111 of them for USA market, and you can add to, you can create your own list. This is my list, and just select that and start exploration. So if I had done that on 31st December 2015, I would have gotten SPY as one of the candidates, and I just open SPY using go with flow. Looking on that day, it takes me literally actually less than 10 seconds to decide that it's a potential go with flow short trade. So I would go for the short near the end of the day. And coming back to the point, when did I run Explorer? I ran it just prior to market close. So USA market closes at 4 p.m. Eastern Standard Time, that is New York time. So I might have run it at say 3:45. If you are beginning with the system, you are taking a slightly more time to decide on what stock to trade. You may run Explorer at 3:30, but after a few weeks you will be able to run it even at 3:45, assuming your symbol list is about 100-200 symbols in your list. Then decide which one to go for and enter the trade. So again, I would have run Explorer at 3:45 p.m. Eastern Standard Time on my customized stock watch list, got SPY as one of the potential short candidate in the Explorer result, opened the chart using hop on template, within 10 seconds decide that it's a potential short opportunity and go to my brokerage platform, enter the trade before the market close. So one point that we needed to decide is, how is my reward risk ratio? Visually we can see it is acceptable, surely acceptable for a swing trade with our kind of hit rate. But let's look at the hop off template. So right clicking on any chart and choosing Q hop off, and I don't want to close the hop on template, so I will uncheck this checkbox, replace existing chart. So it will open the hop off template. I think this is 31st December. Let me draw a vertical line. So we were looking at this day, the magenta color flow candle, that is the optimal short entry point as of 31st December. And we saw our entry point using real-time data would have been at this level. Potential profit target, initial profit will be around here. And now the stop loss. You can see now that hop-off template has some signals that we have in hop-on, but some additional signals and some less signals also. The additional signal we can see here is a series of cyan dot and magenta dots. The cyan dots acts as the stop loss point for short trades, and magenta dot act as stop loss point for long trades. We colored them again. Cyan is on the upper side is also colored green or cyan, so it's colored cyan, and the lower side is magenta. That's why we remember. We call this signal protection signal. It's not only for stop loss, but it is also for protecting profit as the stock moves in our direction. So it is used for trailing stop also, as well as break-even stop. So we, instead of calling a stop signal, we call it a protection signal. Now, as of the entry day, we can see that the cyan dot, which is the short protection signal for a swing trade short, is at this level. So what does it indicate? That indicates the maximum stop distance that we allow for a swing trade. And how is it calculated? It is calculated based on recent volatility of the chart and keeping it a safe distance away from entry price, so that we don't get whipsawed easily. And if you open your stock, ETF, future, liquid instruments using this template, you will see it is designed to be a safe distance away but not too far away, so that we don't lose a lot of money if we get stopped out, but it is not too close to get whipsawed. So as of this 31st December day, we see if we use this maximum allowable stop loss, this was the maximum allowable stop loss, we have acceptable reward risk ratio. So when I enter a trade, I usually put my GTC order, one cancel other. One side I put the stop loss order of the cancel leg, one cancel leg. Trade is that stop loss at this price level, which was say 208.8, and one cancel other. The other leg will be take profit at 197.2. So I place them as one side is the stop order, one side is the limit order, one cancel other, good till cancel, and leave it there and close my computer. And then the trade plays out. I don't try to change my stop loss or target afterwards for the next day, seeing how the stock moves. But I do change my stop side or protecting my profit side if the stock moves in my direction. How do I do that? That is where the trailing stop or break-even stop comes into play. Now, first we place the trade with a stop loss at this upper horizontal line at the protection signal. Now let us see how the stock moved next day. Next trading day was 4th Jan. It moved down significantly. It gapped down actually and recovered somewhat from the lowest point, but it was still a large way down from 31st December. So the year began, we can see on hindsight now, year began very poorly. However, we did, without knowing how it is going to start, just by looking at our Sonar result or Explorer result, we had entered the trade. We could have entered SPY, and if SPY was giving this kind of signal, probably several other stocks were also giving similar short signal. So we could have profited from multiple possible instruments on that day. Now next day, 4th Jan, it fell down, and you see where the protection signal came to. Protection signal, you can see the cyan dot. I will move this horizontal line. It came exactly at our entry price. Now when the protection signal come to our entry price, one could move the stop to the new protection signal and make it a break-even stop. This is one way. Some people don't move the stop until the initial profit is hit. That is also fine. Some people move it as soon as the protection signal goes to the entry price, thereby making it a risk-free trade, assuming it is not gapping up or down. By moving the stop to our entry price, we have an almost risk-free trade. That is when I suggest, from superior profit guideline, that is when we change from initial stop loss to break-even stop loss. It can be done again after the profit target is hit or as soon as protection signal crosses the entry point. So in this case, because there was a gap down, the very next day we could potentially move the stop from initial stop loss to break-even stop loss. So we started with the protection signal, used it for initial stop loss, then we used it for break-even stop loss. And then next day stock went up a little bit but fell again, and it hit the profit target on this day. It didn't hit on 6th Jan, but it crossed our profit target on 7th Jan. So as the stock started falling down, for our short trade we have more and more profit. Now we have the chance to protect our profit by moving our stop to the cyan color points. So that is how the protection is used also as a trailing stop loss. So on 7th Jan we'll exit half our position at open. The stock opened here, our limit order was placed at this level, so we will be exiting half profit here. And if we hadn't moved our stop to break even, this is surely the time to do that. Again, we can move from initial stop to break even in two ways. First is as soon as the protection signal crosses the break even point, or after the initial profit target is reached. After initial profit target is reached, we exit half, and we must move the break even stop to break even stop to protect our profit. And then as stocks keep on moving down, we move the stop to trailing stop, and you will see we will get stopped out on this day. We'll get stopped out on this day. So 13th Jan. We'll exit half profit on 7th Jan, and on 13th Jan it will probably get stopped out using this stop loss. No, actually it will not get stopped out on 13th day. It will get stopped out on this day, on 21st Jan. Now every day we look at the protection signal. So if we are looking at this yellow candle day, which is 12th Jan, at the end of the day we see this is the protection level. So we would have moved the protection, and now I am going to remove the entry point. I'm going to move the initial stop loss. I'm going to lower the stop loss. So as the stock moves down and down and down, say we are on this yellow candle. I'll move the vertical line. So we are on this day, which is 12th Jan. Then at the end of the day, our protection level will be at this point, this cyan dot, which is the protection level, and we will move the trailing stop to this level. So the next day that protection will not be hit. Then we will lower it again, and next day it is not hit, and we will see on this day, on this red candle day, we move our protection to this level, and next day it will be hit. So we will get out of the remaining position as a swing trade on 21st Jan. And you will see it beautifully captured the entire down move. For large liquid stocks, it moves in more predictable manner than speculative stocks or penny stocks or very low price stocks, and there we can safely use this protection signal in this manner to start with initial stop loss, move to break even, and keep on changing to trailing stop loss, lower and lower, to protect the profit in short trade, and exit in this case exactly at the bottom. So this is how we use flow color to identify optimal short entry point, take the trade, exit trade at boundary line, half at least, and then use trailing stop to capture more profit or letting profit run. So that was a good example of a swing trade starting with Sonar and using the hop on and hop off template. Now interestingly, we exited this trade on a day where we see a diamond. It's a kind of diamond at the drawn below the candle, this yellow candle. So why don't we look at this signal first? Now, for looking at this signal, we could use this template, but it is also in the hop-on template, and it is actually the headwind signal. Headwind signal. So let us go to the hop-on template. Okay, I'm also looking at the watch. It is exactly 1 hour from where we started. Now we have a long session, 4 hours. So Hunter and everybody, why don't we take a 5-minute break and come back after 5 minutes? You may grab a cup of tea, drink a glass of water, and come back. And when we come back, we'll start where we are leaving off. That is exactly at this headwind signal. Okay, Hunter?
Okay, sounds good.
Lovely. So we'll come back exactly in 5 minutes. So meeting restarts at 6:05 p.m. EST. See you soon. Hi, Hunter, everybody, I'm back.
Okay, we can hear you just fine.
Lovely. So let me start. Now, I like to keep on repeating certain things over and over again for the beginning traders using Q charts, so the ideas get more ingrained into the head of the trader, including myself. It's good to reinforce the idea. So we just looked at a go with flow trend following short trade taken on 31st December, while SPY was already starting to go down for a few weeks, but we caught the trade at the optimal entry point, exited half of the trade at the initial target of lower boundary, then using the hop-off template, the other chart, trailing stop, to trail and protect profit, let profit run and exit the remaining exactly on this day, the yellow candle day, which is 21st Jan. Now, I mentioned that this flow color is optimal entry point, and it includes the traffic light and something else. Now, what is something else? Before going to headwind, let me look at it. It is actually listed in the book. We have multiple books, and I will go to one of them now. This is a superior profit trade signals quick reference. So we have created a guideline checklist. So for every kind of trade, in this case we are looking with go with flow, that is trend following trade for daily chart, which is useful for swing trade. All of these conditions are to be met, and we have created two columns, one for long, one for short. And let's see how unambiguous or easy to use they are. So we will go back and forth between the chart and this checklist and see if everybody in this class agrees to the day being a potential short day or not. So first condition is flow or traffic light candle color. We'll look at the right hand column for short, because we are looking for short. Bearish red, the flow color red. So if we look on this day, 31st December, yes, it is magenta, red or magenta. So that is bearish. That condition in the checklist is met. Second, fast and standard. If the second and third criteria, fast and standard direction line are bearish, which is descending. Now, whether a line is ascending or descending, everybody will interpret in the same way. So yes, as of that day, it was going up and then just tilted down, both of them. It is descending. So those two criteria are met. The next is relative performance, which is bearish descending. Okay, now that we look at relative performance, why don't we explain that? Relative performance measures the performance of an instrument relative to broad market. Now, broad market, for US market, we can say it is S&P 500. For Jakarta, you can say Jakarta Stock Index. For India, you could say India Nifty 50. Similarly, for Australia, Japan, Germany, London, all markets. Now, because we are looking at S&P 500, which is same as the broad market setup for my chart, relative performance is not showing. Otherwise, there will be another line on this chart, relative performance. Because it is SPY, that criteria is not useful. Because for me, the broad market is also SPY. Relative performance related to SPY of SPY will be same. So we don't need that criteria for this particular chart. Otherwise, we will require it to be descending. But for this case, it is not required because we are looking at SPY itself. Now, candle chart, the candle shape should be bearish, lower high and lower low, with lower high and lower low candle chart. So I drew this line here manually, but as of that day, if we open the chart on that day, we will be seeing automatically drawn lines like this red color line, automatically drawn. So that would be there, and it is showing that the top of the wave, if we look at the stock candle chart as a wave pattern, top of the waves are falling. 1 peak, 2 peak, 3 peak, 4 peak. So we say the highs of the waves are becoming lower. So we have lower high, 1, 2, 3, 4. and the lows are also falling down from here to here to here to here. So we have lower high and lower low. This can be easily seen visually. So if we are on this day, we can say the stock is starting to fall down on the candle chart. So we have lower high, lower low. So that criteria, bearish, lower high, lower low, is true as of 31st December. Then for that particular day's candle shape itself, that particular day, exact that day, it should be bearish, solid, or with long upper tail. Yes, it was a solid candle. And we all know candle charts. If a candle is solid, that means open of that day was at the higher end and closing was at the lower end. How I remember is like solid things drop. So solid candles are bearish. Whereas if a candle is hollow, then the open is at the bottom and close it at the top. How I remember is hollow things float. So hollow things must be bullish as far that day is concerned. So as of 31st December, if we look, it was a solid and it did have a small upper tail also. So that is what we define as bearish shape candle. So this criteria is also fulfilled. And the last criteria for the daily chart is movement, that is together momentum, speed, acceleration are red. So as of this day, we could see that all of them turned red. That is why on this day, using the chart, anybody would interpret it, every trader, whoever it is, even a high school graduate or an experienced trader, 50, 60, 70 years age, or an experienced trader also, maybe 30 year age, we look at the chart in the same way, unambiguous way, and interpret it as an optimal short entry point. Now, how often do we look at this checklist? In the beginning, when we start with Q charts, I see that our traders look at it for maybe 3-4 days. After that, it is so intuitive, the color coding and the fact that optimal potential entry is already pointed by magenta color, it makes the decision making very unambiguous. That is why we call the system Q. U stands for unambiguous. E for easy, because there is actually not even any label on the chart. Just by looking at the color, we can make decision, and using Sonar, that is Explorer. So it's easy to use, and we say it is complete because it can be used for long-term swing trading, day trading. It can be used for forex, futures, stocks, options, and also it can be used for any market in the world because MetaStock supports that data. So we looked at the trade signals reference book and identified this as a short opportunity. It was identified by Sonar as well, and the checklist was applied successfully by any trader. Now coming back to the exit point of this trade, interestingly we see it also had a headwind diamond. So let's now start with headwind signal. The headwind signal is a unique signal which doesn't come often. You can see from the beginning of the year, it came only once for S&P 500. And it comes exactly on that day. Exactly on that day. It may come in the beginning of the day if we have real-time data, but we should wait, just like any other color of the candle or signal, should wait till the end of the day or near the end of the day, say 3:30, 3:45 p.m. Eastern Standard Time for US market, to see if the signal is stable, it's going to stay for the day. And this headwind signal shows whether, even if the stock is moving down, is the rate of moving down slowing. It doesn't say that trend will reverse, but it says that maybe it will stop falling, maybe. And how do we use it? We use it in different ways. One is if we have a short position entered, like in this case, headwind signal tells us that if we had not put trailing stop, this is the time we better put our trailing stop to protect our profit. So it helps us to exit a trade. By using headwind signal, if we already had a trade which was coming down in this case, and if we have headwind and cyan color headwind is bullish, as we said, green or cyan is bullish. So this is a bullish. If we had a short trade, we better exit the full position or tighten our stop using trailing stop. That is how we use it for exiting, but we can also use it for entering a trade. A swing trade long, that is a trend reversal trade. How would we find this trade? We will find it using Explorer. In Explorer, we saw that we have headwind long and headwind short, and I said typically I just run all of them together, bounce, go with flow, and headwind. And if we ran headwind Explorer on that day, headwind short, we would have found SPY as a candidate. We would have drawn the chart, and we will see the hop on template like this. And why don't we apply the checklist for that day if we are looking for a reversal trade? So let me go to the trade signals checklist book again. Just like for go with flow, we have created a standard guideline. You may alter it after some more experiment when you become more experienced. But in the beginning, I suggest to stick to this. It's slightly conservative, but very useful, very useful, safe trades for go with flow. Now let us look at headwind. And you see a lot of charts are there to give examples also. But let's go to headwind trade signal. This is the checklist requirement for headwind trade signal on daily chart. All of the following conditions. And now we are looking for a headwind long signal because our headwind signal was bullish. So we are looking at the headwind long signal. So let's look at each criteria. The first criteria is flow or traffic light candle color should be bullish or bullish green or yellow neutral. Now let me move the vertical line to the proper place. Now we are looking at this. Let me clear the chart. Okay, we are looking on the right hand side of the vertical line, and this is the day 21st January. On the day we have a bullish headwind signal. So running our Sonar or Explorer, we would have found SPY, and now we are looking at the checklist. Say we are new trader using Q chart, so we are looking at the checklist. The first checklist criteria, traffic light candle color is red or yellow. Sorry, headwind long is green or yellow. That is met. It is yellow. Great. Let's move to the next criteria. Headwind signal should be there. Bullish green. Okay, it's green or cyan. Fine. So it is a bullish headwind signal. That criteria is met. Second criteria is met. Third, relative performance ascending. As we just saw in the case of go with flow trade, because we are looking at SPY, which is the broad market in my setup. So there is no need to look at relative performance. Otherwise, we will require the relative performance, the additional line shown on the chart, to be tilting up, ascending. But we don't need it because in this case we are looking at broad market itself. So that criteria is not required. Candle shape for that day has to be bullish, hollow, or one with long lower tail. Now in this case it is hollow, but we cannot say it is exactly bullish. We can say it is an indecisive candle because it had a long upper tail as well as a long lower tail, meaning during the day somebody tried to push price down. Some large traders, group of traders, investors, they tried to push it down but couldn't keep it to the lowest point. And some traders, big players, tried to push it up but couldn't keep it at the upper side. It did close higher relative to last day, but with a small body and very long tail on the either side. So in the book, in the big book, we have 80+ pages. We say this is an indecisive candle. So the criteria that the candle shape is bullish, hollow, or with long lower tail, that is not fulfilled. The last criteria is acceleration should be bullish or green. As of that day, yes, acceleration turned green. So all the criteria are met except one. Now, as I said, the criteria in the book They are a bit conservative. In the beginning, it is safe not to use it. But there could be different ways a trader could play this. Instead of taking a long using stock, one could take a trade using options to just put little amount of money, and option trader could just buy simple call at the money call, for example, or one could also play with vertical by buying call vertical or shorting put vertical. We will not go into those discussions in our regular classes. We may go into more detail, but in this session we have a lot of material to cover. We just note that as per the checklist, I will suggest for beginning trader we avoid taking that trade. But at least if we had a short trade initiated on 31st December, this is definitely the time, if not done already, to tighten stop or maybe close the entire trade. Now, if we were more willing to take a long trade, then this will be a good time to take a headwind long trade, and probably one will look at QQQ, Dow Jones Industrial Average, few other things, and take the trade. But let's say we didn't take the trade. So we at least saw how the headwind signal could help us protect the profit that we entered earlier from the short trade, and let us be ready to take a trade. But say we didn't take the trade. But we must acknowledge still the headwind signal pretty well, which came exactly on this day, caught the bottom of the entire move. And since then, it made a double bottom, but hardly went much below that, and it rallied after that. So how could we use then? On this day, a new trader wouldn't enter the trade, but how we would use it? We see now it made a double bottom on 11th February. On 12th February, it went up. So if we draw a horizontal line, we will see that it penetrated the low, the first low on this day, but it came back up on the next day and it turned yellow. So it is a kind of fake breakout on the lower side, stopping out all the people who would have entered trade here and not booked profit. And this day could be an entry point. 12th February could be an entry point. So that's how we use headwind signal. If the headwind signal came and for some reason it didn't take it, we could look for price to come back below this level or near that level and give us a safe entry point. This double top, double bottom, they work quite well along with some other signals, not in itself, but this yellow day would be probably a stretch release reversal trade. So we'll go to stretch release reversal trade soon, but to continue with the headwind, if we had taken the headwind trade, where is our profit target? Because we saw it went up and came down. So if we entered the trade and waited for the price to go to upper boundary, then we'll get stopped out, most likely. So that is where we have to know where is the profit taking target. Now coming back to trend following trade, go with flow trade, our entry point is actually near the middle of the two bands, or you can also say where these two direction lines, fast and standard, that is magenta and cyan, come together, but it's also the middle of the boundary line, which we call value area. So in a downtrending stock, we like to enter in the value area, which is middle of the boundary point, take profit at the lower boundary. But for a reversal trade, we are looking to enter a trade for headwind signal outside the boundary and take profit in the value area. So our profit taking point will be somewhere here. If we took the headwind trade at all, will be somewhere here and we'll exit. Another thing we do, if our stock goes very close to our target but doesn't touch it, but once it has moved so much, we must move the protection signal, use the stop loss. Just like now I explained, if we go to the hop off template, we'll see by the time the price moved here, the protection signal would have crossed the entry point. Why don't we look at that? This is the hop off chart. If we are entering the short trade, the long trade using the headwind, bullish headwind signal, a long trade, then our initial stop loss will be maximum allowed stop loss will be somewhere here, maximum. Then as the stock moves up, we can see the magenta color is moving up, and by this day, 1st February, the magenta color dot has moved here. So that means our stop loss has moved well above the entry price, and we must make it a trailing stop or break-even stop. By doing that, either we book the profit at the value area, but if we just missed it by few cents, this protection signal helps our trade. We don't take loss in a trade. Once a stock moves beyond entry point, the protection signal moves beyond entry point, we move from initial stop loss to break-even stop loss to protect this trade. So that is how we will not make a loss in this particular trade, and instead we'll wait to enter another trade as a double bottom stretch release entry at this point. So what we did then, I'll summarize quickly. For go with flow trend following short trade, we try to enter the trade at the value area. For short trade, our initial target is at the lower end, but for reversal headwind trade, we try to enter outside the boundary line at an extreme. When the headwind signal comes, try to book profit in value area. It's not at the other side of the boundary line. That's how we usually, you can say, traverse the distance half of the two boundary lines. That's exactly the value distance from value to too much lower side. For long trade, if we use this cyan line, for example, as a go with flow long trade, if we apply the checklist just like we applied on the magenta color, but for cyan color on the upper side long trade, then we'll see probably this is a successful long optimal entry point. Profit target will be upper boundary, which will be hit. So we use entry at the value area for trend following trade, like this day or this day for short, and for reversal we use the extreme to entry point, take profit at value area, and use protection signal for initial stop loss, break even, and trailing stop loss. Now let us look at this day. We saw that an initial trader will not take a long trade using this candle, and surely not enter a long only using this chart. If he had additional signal from QQQ, DIA, or other market information, an expert trader might use this day to enter a long also, maybe using options to reduce risk. But let's say we are looking at novice traders using Q chart. So this is not a valid day to enter the trade. So one would wait patiently, and on this day one will take a stretch release trade. That's what I mentioned. Now where is the stretch release signal and what it is? Now we put it into a separate chart so as not to clutter the chart, and that is the decision template. So when we need few more signals to make a trade, and stretch release is a signal, and this is a daily chart, so it can be used for long-term or swing trade entry. It helps us make that decision. So let's look at that. Now this is same SPY chart using the decision template. We can see we have some additional signals. We'll go through one of those for now. So let us delete some of the signals. Okay, I think this will do. This will do. Now we were looking at this day, 12th February. Let me keep the two charts side by side. Okay, now we have on the left hand side hop on chart our go-to template for most of the swing trade entries for SPY, and on the right hand side we have decision template also on SPY, both using daily chart. And we saw that a novice trader, Q trader, wouldn't enter a long using the headwind signal, but he will put it in a watch list. How do I put it in a watch list? I actually use icon. So this is a sample icon. So I have just put some symbols here. So SPY is usually always in my list at the top. So I have SPY, QQQ, DIA. There's the 3 broad market indexes ETFs for US market. Also US oil, UNG. And UNG, we had a very good trade posted in community for long term and swing trade, and gold, and some mutual fund just for my own use. And if you are trading any particular stock, you may keep it. And this quote list, this is called quote list in icon, it is customizable. So for superior profit traders, we have customized it. We have only the necessary, the way we think is necessary fields here. And if you see, one of the useful fields is the next upcoming earnings date. So if we are looking at any stock, we are looking to enter a trade or exit a trade just before earnings, just from this list we can see. And I have also grouped them by sector and industry, and it is also sorted by that. So I can at a glance see which sectors, which industries are doing well in my portfolio. It could be my portfolio, it could be my watch list, and you can have 100 stocks here, or you can have 10 stocks. Because it is, icon uses real-time data, from the beginning of the day it will keep on moving. And what is striking right now, for example, Fold, it's a manufacturer, it's a drugs company, drugs manufacturer, healthcare biotech company. It went up by 8.6% today. So this is, as I was mentioning, in case of looking at the Dow Jones also, today in Dow Jones, which are all large companies, 3M was the best performer. And we drill down to come here. One could have probably taken a day trade using 3M. Similarly, if you have a standard quote list, standard watch list, and if you see some of them is outperforming others, probably Fold was doing well, Amicus Therapeutics was doing well from the very beginning, you could have entered an easy and very profitable early range breakout. I will explain it later. Day trade probably using this chart. We'll have to look at fine tune, but we have some time today to we look at the day trade opportunity also. So this is how we use quote list. Now coming back to the chart, once we decide that okay, we are going to keep an eye on a stock, say this headwind day we didn't enter a trade, my standard practice is to put it into some watch list, and I use icon. There are certain advantages. For example, for Fold, if it is going up in the morning, and it could be done for SPY also, I could just right click, go to related. If I want to know if there is any news on that stock, why it's moving. By the way, I don't trade on news, but if a stock is moving, I don't mind looking at the news. No judgment, no another expert's view how it is doing. I just trust my eyes. That's the chart. But it's good to have a look at the news. So why don't we do that? This session is for actual traders, how we do, not just for an add-on. So let's look at Fold news, because it was doing well today, and we see today there is actually no news. So that's fine. We don't trade on news, but there is no news today, but it went up. So we'll look at the chart later. So when a stock gives headwind signal, but we don't enter a trade for some reason, like in this case SPY, we put it into a checklist and we keep an eye on that. And when it makes a double bottom, we are ready to enter the trade. So when we pierced through the low, this red day, but we wouldn't enter a trade, our standard guideline is red traffic light, no long entry. Green traffic light, no short entry. So we have to wait till the color turns yellow or green. So if we are taking a stretch release signal, then we can see what is stretch release is actually this arrow signal. Up arrow is bullish, cyan is also bullish. So we are going to wait for this day. We are never going to catch the bottom or catch a falling knife. we are not going to catch a falling knife. So we use certain axioms in our way of trading, certain wisdoms of traders. One is trend is our friend, as I mentioned, and the other is we don't catch a falling knife. We take reversal trade, but we don't catch a falling knife, which is we don't enter a long trade in a traffic light red candle. So we wait for this yellow candle to happen, which was accompanied also by this up arrow. Let me magnify a little bit. Now we are explaining the stretch and stretch release signal. When a stock moves in a waveform, as it goes down, it gets stretched like a rubber band. And when it gets stretched, we have these stretch signals coming up, which you can see oversold. It says oversold. If I hover my mouse, it is oversold. So red is stretched and magenta is stretched even more, very oversold. Fine. But when it is getting oversold, we have no business entering the trade. We have to wait for having a up arrow, that is the rubber band stretch is released. But this stretch release is a very fast signal. It changes very fast in each leg of the stock move. So when this leg is moving down, it gets stretched, stretch released, stretched, stretch released. This is a fast signal. It moves very, very fast as the price moves. So in itself, I wouldn't use it to enter a swing trade, but this is not an usual case. Here we had a headwind signal also on this day. Now that was another reason probably somebody could enter a headwind trade on this day, because that headwind was also accompanied by a stretch release signal on the same day and preceded by very high and extreme high activity. Okay, so when we mentioned very high, extreme high activity, now let's our job to explain that. This lower panel of both of hop-on template and decision template and many templates is activity or volume. Activity or volume of the instrument. Now this has a lot of information encoded in that, all using simple color coding, consistent color coding. A thin bar, and let me zoom in. A thin activity bar like here means it is low activity, and thick means it is high activity. Now on top of the thickness we have the color of the bars, activity bar. A red bar means, for example, to the right of this candle, a red bar means price went down from previous day, and green bar to the right of this vertical line means price went up relative to previous day or previous bar, in this case daily chart. So we just by looking at the color we know day to day whether price is going up and down. This is similar to traffic light, but traffic light does some smoothing, and this candle, this activity bar just shows it exact daily move, up down or not. So we have several pieces of information again. Thin is low activity, thick is high activity. Then red is it's a down day relative to last day, green is up day, yellow is neutral day, very rare in SPY, but we found a neutral day here, close it same as previous day. And then we have other dots. The cyan dot indicates this extreme high activity. We don't need to actually count the number, etc. If you have noticed, in none of the indicators we need to count where it is. We don't need to see convergence, divergence. Just by looking at the color and the shape and the line, we can decide what to do. So this dot, cyan dot means extreme high, and green dot means very high activity. And on the lower side we will have magenta for extreme low activity and red for very low activity. Just by looking at the color we can decide that. Now when we are trying to take a reversal trade, so we had a headwind signal, we also had a stretch release. If we are taking a reversal trade, and in this case the candle shape was neutral, we would like to have some more C confirmations. In this case, we can see there was very an extreme high activity preceding this down move, and then it tried to go up, and just this previous red candle had a very long lower tail. It might have bounced from a memory line. We don't know as of that day how the memory lines looked at. Memory lines as these trend lines automatically drawn, green lines here. But let's forget the memory line for now. It did try to go down a lot on this red candle, recovered. That was bullish. But red day we don't do any trading long side. Next day the headwind bullish signal, which was accompanied also by a stretch release signal, and extreme high activity had already happened. So one could have entered a headwind trade in this case based on those additional confirmation. As I mentioned, just by itself the headwind checklist didn't allow us to take the trade because of the candle shape, but the additional confirmation, some seem to be there. Fine, but now we are coming back. Let's say we still didn't enter the trade, we didn't book profit. Then we came back to this day, we had it in our watch list, maybe in icon, and then as of this day we looked that it constituted what we call a fake breakout. It tried to go down, came back up with a stretch release. Exhaustion had already happened before, so that is a point to take a stretch release long trade, bullish stretch release long trade. Our stop loss will be just below this recent swing low, so it will be somewhere here. We can use hop off template, use the protection signal to exactly specify that price point, but we can see it was never hit. It price never went down, and it actually made a big long rally up. Again, just like for headwind reversal trade, our initial profit target will be value area. So we'll be booking profit somewhere here on the left hand side. I am pointing somewhere here, and then we'll use trailing stop to let profit run. So let's look at the hop off template to see how that trade would have exited. So we were looking at that day, 12th February. We had taken a stretch release double bottom based on exhaustion, preceded by headwind, reversal kind of bullish stretch release trade on this day. So our stop loss will be here, and you can see some based on volatility the stop loss was very close to the bottom. That's fine, and it was never hit. Just after our entry, this was our entry day, to the right side of the vertical line. This was our initial stop loss. Our profit target will be somewhere value area, that is inside in the middle point of the two boundary lines. Let's say somewhere here, somewhere here. So in 1, 2, 3, 4, 5th day, our initial profit target will be hit. Now our entry price, what was our entry price? Our entry price was, using real-time data, this day. This is again an example, like just like we saw in the first go through short trade. If we have real time, we have the best price of entry. Next day it dropped already with a gap down. We missed the chance because it will be, the stop loss will be far away. Using real time, we could catch this trade. Here also, using real time, we have a much better price. It priced gapped up. Even for this headwind trade, if we took it using the stretch release also that appeared same day, the next day will be too late. So using real-time data, using MetaStock Zenith comes with real-time data, we would have much better feel on our trade, and we will not miss all these three trades will make good profit. So if we entered using real-time data on 12th Feb, next day price went up, our stop loss protection signal came to this level, which is still below the entry price. So we will not move our stop loss from initial stop loss, but then next few days later the stop loss moved here. So now we'll move stop loss to break even. Once the profit is hit, initial profit target, now we can keep moving the stop loss to trailing stop loss. And again we see how beautifully the protection signal kept us safe distance away and led the profit run, and get hit only on this day. On this day, using this magenta protection signal, on 29th April, we would exit the trade fully, which was entered on 12th February. That's a long distance away from the entry point. Half we would have exited already here, but the rest half we let profit run. And again, the protection signal helps us to enter the initial stop loss, move it to break even, and use the trailing stop loss to capture maximum distance that the stock can move in our favor. So that is how we could use headwind signal to either enter the trade, but not for beginning trader, but we could enter it using a stretch release by using the stock, keeping it in watch list and waiting for a double bottom or a near double bottom. We'll also do. Doesn't have to always come below the first low. Slightly above is also fine. Using the stretch release signal, we made beautiful trade. So we saw so far 3 trades. One, a go with flow short trade, worked beautifully. One, a potential headwind trade, maybe more for slightly experienced traders, but then a stretch release trade here, and all of them work pretty well. And we just randomly took up a chart. So we covered now the headwind signal and stretch release signal as well. Again, I will highlight the stretch release is a fast signal. Just based on that signal, we don't take a swing trade. It is very useful for day trading also, because day traders need very fast entry. They cannot wait for price to move, and there the stretch release signal on fine-tuned template works very well. We'll look at some examples later. Now we had this example for swing trade. Now we will go back to the hop on template again. Okay, we are back at the hop on template. We are looking at each template one by one and every signal on those templates, and while doing that we are looking at actual trades, how we would have taken using superior profit guideline. So in the hop on template we have covered the traffic light band, the upper boundary, the direction lines, the flow candle color, the headwind signal, and now we see some more signals. We have covered the movement, we have covered the activity also. The relative performance is not appearing here, so let me move to a new signal which is not SPY so that I can see the relative performance. We just saw fold gained a lot today, so why don't we look at fold? So in MetaStock you can just start typing the symbol, and it will show up. You can start typing by symbol code or by symbol name and it will show up. You can select instrument and it will refresh the chart with the new symbol. Okay, that's good. It's good. It's fold. So now we are looking at fold, and now we see that there is an additional line being drawn. This is the copper color line, and intentionally again we colored every indicator distinctly, so just by looking at the indicator after a few days you know by heart what it is. So this is relative performance. We don't need a label to identify that because we want to react very fast to market movement, not much thinking. So this is relative performance. This shows whether an instrument is outperforming the broad market or underperforming. If it tilts up like here, then the instrument is out.
Hey, Cigar, we lost your audio. Okay, hold on for just a second. I'm just going to shoot him a message telling him about the audio. It doesn't sound like he can hear me either.
Hello, can you hear me now?
Aha, there we go. Okay, perfect.
Okay, great. Thanks for mentioning that, Hunter. Hunter,
No
can
problem.
you tell me where you stopped hearing me?
O-
What was
only
your?
a, only about 30 seconds ago. So
Okay,
yeah, not
okay,
that long at all.
okay. Thank you for that. That's the restriction I'm working with because I'm in Bali. It's an island, and it had a rainy day today, some storm, so the internet is not very good. So bear with me, and thanks for noting that. So
No
great.
problem.
Let me go back to fold again. So we just chanced upon fold. How did we chance upon fold? Because we looked at quote list. Okay, actually fold is not an instrument I trade actively, but some of the traders sometimes send me some stocks, and some group of traders who trade only pharmaceutical stocks. They mentioned fold, so I just added it in the list. And today it went up a lot. And while trying to see relative performance, we explained relative performance. It is uh, if the stock is outperforming the market, then relative performance, this copper line tilts up. The sharply it tilts up, the better is the outperformance. And if it tilts down, it is underperforming. The sharp the decline, the more it's the down performing. Now we have a headwind signal. That is good. But why we were going to look at a potential headwind trade. We chanced upon it, but if it was in your symbol list, you could have found it by running the headwind long candidate also. Again, as I said, I just run all 6 of them usually, and that gives me enough number of trades every day. Now, continuing with the checklist, why don't we see if we have a headwind trade opportunity here? And this is how at the right side of the chart, where for most people it becomes difficult to decide what to do. If we look back, it is easy to say, okay, we short on this magenta, make a lot of profit. But at the right side of the chart, it is difficult usually, but not with our system. In our system, even on this magenta, the checklist is very unambiguous. So whether it is middle of the chart or the end of the chart, we can simply cover the right side, make the same decision. So on the right side of the chart, we chanced upon this headwind signal. Now, when we have here, let me also explain the headwind color. We have two possible headwind color signal. One is green, that is headwind, and here it is cyan, means you can see the pop-up. It is actually headwind bullish at pendulum low. So what is pendulum low? Pendulum low is stock, we can imagine it's moving like a pendulum, but not across a vertical axis, but up down between high and low. Pendulum low of a stock, it's a term we use to indicate that the stock is very low. For a daily chart, it's very low. It has not been so low for a long time. And if we are trying to go for long-term investment, this may be a good time to enter the trade. But again, we don't catch a falling knife. We need to have a proper signal to enter a trade. So could this headwind at pendulum be low be that signal? Let's look at the checklist. Flow, our checklist headwind trade signal on daily chart, all of the following conditions. We look at the middle column for long trade. Flow or traffic light, the candle color, flow color should be green or yellow. In this case, we have yellow, so that criteria is met. Then a headwind signal, of course, it should appear bullish, green. So in this case, it's a pendulum low, so cyan, great. That's even better if we are trying to catch the bottom. That criteria is met. Third checklist, relative performance, bullish ascending. Remember, for SPY, we ignored it because SPY was broad market. But for this stock, we cannot ignore it. It's not broad market. We want to see if it is doing better than the broad market. So yes, it did tilt up. And it did tilt up quite sharply, though it was falling earlier. Today it outperformed the market, which we could see from quote list also, it went up by 8.6%, whereas SPY went up by only 1.8%. So it was hugely outperforming the market.